Thursday, January 17th, 2019, XgCTCWb, home of alternative economics and contrarian views. This morning I want to talk about the great central banking delusion and why we should not fall into the trap that reforming the Federal Reserve or the Bank of England or nationalizing it is the way forward. The way forward, in my opinion, is no central bank at all. Why do we need a central bank in a free market with the rule of law and sound money? Of course, before that, I'll look into the markets. I'd like to also, again, thank all the viewers, subscribers, new subscribers, all those who have contributed to the channel through PayPal, Patreon, through donations of cryptocurrencies, through buying XgCTCWb merchandise in the Teespring store. All the details are below in the description. My favorite, of course, one of my favorites is the End the Fed mug. It says home of alternative economics and contrarian views. And you've got at XgCTCWb there. Those of you, of course, also who want to accumulate precious metals, gold and silver, you can use my XgCTCWb promo code at goldinvestments.co.uk. Arguably the oldest family-run bullion dealer in the city of London. You get a 0.5% discount there. So it's a little later than usual this morning. It's 8:45. I'm going to look at what the markets are doing this morning. So, and I want to talk a little bit about the Dow as well, the technicals. Spot gold right now is $12.94.20. So gold still range bound. As I said, the key levels are 1,300 and 1280 in my opinion. So right now we're in the middle of the range. It's up about $1 this morning. The low's been 12.91 and the high 12.95.50. Silver down 4.5 cents, 15.54. Range has been 15.51 to 15.63. So precious metals going nowhere in terms of fiat prices right now, fiat money prices. The Dow is down 116 points at 24,081. The low has been 24,035 in the futures, and the high 24,212. And I want to look at a chart. Actually, this is not the future. So this is the Dow proper, the index. So as you see right now, it's not trading because it's officially closed. The index itself. And you can see there from the high on October, in the beginning of October, which was actually 26,951. But with this bar chart retracement tool, I couldn't quite get the exact number. I got 26,960, which is a little higher, but that won't make a huge difference looking at this retracement. And the low as well is a little higher than the actual low here, which was 27,721. But again, I couldn't get the exact figure for some reason on this chart. But it's roughly right. It's just to give you an idea where the 50% retracement is, which I've been telling you about. It's at 24,353. So yesterday, the high was 24,288. So there's still a little bit of room to the upside. These technical points, of course, are not perfect. There's a technical point from the high, for example, in 2011 to the low in 1999, for example. That comes to around 1,084 in gold. But the low in December 2015 was 1,046. So these are not exact. So we could be at a point where the market turns around, and I think we could see another big drop. Where it will go, I don't know. There are a lot of people who think it will be a huge drop. I would say that an initial target would be the recent low in December, on December 24th, just above 21,700. That's always how markets work. And if we break that, all hell could break loose. So we're not out of the woods yet. We get headlines like we're getting, anecdotal evidence, and this is coming from Goldman Sachs, who I know yesterday their stock price went up a lot. They had good results apparently. I have followed Goldman Sachs, the chart. Goldman Sachs closed the year last year below 170. It's rebounded massively since then. Does it mean that it's out of the woods? No, I think it's still not looking good. As I said, markets don't go up nor down in a straight line. But what I saw here this morning, which is very interesting, Goldman warns of hit to economy as rich cut spending once they see their brokerage statements. Yeah, and I think that will be the next crisis, next depression or recession, whatever you want to call it. It's going to be driven by the very rich because they've been the ones who really benefited from the policies of the central banks and and the governments in the last 10 years. The 1%, so to speak. So that's the Dow. S&P is down 14 or 0.5% at 2,601. NASDAQ 100 futures down 2/3% or down 45 points. Currencies are fairly steady. Cable or sterling is down 11 pips, 128.67. Euro is up 4 pips at 113.96. And the dollar is down 1/3% against the yen at 108.76. The dollar's up 1/4% against the Chinese yuan at 677.70. Crude is down 2/3% at 52.20. Not much to WTI. Not much happening there at the moment. Bond markets as well. 10-year yield down 2 basis points this morning. That means the prices are higher. It's at 270. If the stock market turns around, as I think it might, we could see people pile into bonds even more, and we could see this yield drop further. So, central banking. My whole problem with central banking is that with the word central, right? And the other thing it implies is that banking businesses are not safe and that they need protection from a central authority in order to stay afloat. And my main problem with that is that it creates moral hazard. What is moral hazard? Well, it's just the premise that people, and institutions will not act responsibly if they know someone's going to bail them out or help them out. It's like with children, their parents spoil them, they're going to keep acting badly. So it's the same thing with business or anything in life, in my opinion. And I saw a really good little video yesterday. It's called The Truth Factory, a YouTube channel, and it's a really interesting channel because it's got a woman's voice and it's got a little cat talking, and she or he, it could be a he, you never know, did a very good analysis of the history of banking in the United States. I think the title of the video was The Central Bank Scam. And when it got to what should happen to the Federal Reserve, this Truth Factory cat even said, well, there are some of those who think central banks should be reformed or nationalized. Some of those. And I think that's the wrong thing. I think... there is no central bakery. There is no central car maker. There is no central farming. You know, that's communism. We know that it doesn't work. Even the the fifth plank of the Karl Marx Communist Manifesto reads, centralization of credit in the hands of the state by means of a national bank with state capital and exclusive monopoly. And to that, I also add centralization of credit in the hands of private banks, which are in cahoots with the state, which is what we've got now. So we don't want to jump from that into one where the state is in charge, because they will always cooperate with the private banks because it's a central bank. Market should regulate businesses, in my opinion. There's a lot of people who think we need all these regulations to protect the consumer. Am I against protecting the consumer? No, but I think the best tool to protect the consumer is the market and free competition, free market and competition. Let the consumer do their own homework. Let them, if a producer or a store or whatever, or a business screws their consumers, people will find out, and word of mouth will get around, and the free market self-regulates itself. Regulation is a tool of the big corporations, which are a product of this centralization of credit. And why do I say that? Well, because the big businesses can cope with the regulation, because regulation costs money. The other thing regulation does, it increases the size of government because they got to employ everyone to inspect things. In the market, you don't need to do that. We need no central banks. We don't need a central bank. All central banks, excuse me, have achieved in the last 300 plus years is to help build up huge national debts for nations and for peoples. They've financed both sides of wars. So they've been a tool to allow for war and misery. I say no business or institution should be that powerful, and that's why you have to leave it to the market. That's why you need small government. It might sound a little bit counterintuitive for a lot of people, because a lot of people think, oh, we need government to help us to do all this, but that's what they want us to think, that we can't look after ourselves. We need a central authority to look after ourselves. But no, all a central authority does is create corruption. The old saying from Lord Acton, power corrupts, and absolute power corrupts absolutely. So in my opinion, competition and small powers maybe is the best thing. The power of each consumer, each individual. So no, it's a delusion. We don't need a central bank. People are clever enough to run their own affairs, to accept whatever they want as money, as a medium of exchange. It's not the government's function to do that. If you're going to have government, as Bastia said, government is there only to protect the rule of law. All government is there for is to protect people's liberties and property. That's it. We need to, and that's what the founding fathers really wanted to create. Of course, that's been all, corrupted by the bankers, especially the creation of the Federal Reserve in 1913. So yeah, abolish central banks, abolish the Federal Reserve, and the Fed. If you enjoyed this video, make sure you give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and you can also follow me on DTube, Steemit, and on Twitter. I wish you all a great day. I'll talk to you later. Take care. Bye.